Well, for his take on all this, I'm joined by Ross Gerber, President and CEO of Gerber Kawasaki. Welcome, Ross. Many thanks for joining us today. Big news today from Apple, which has been something of a laggard so far in this race for AI. Does this latest news put it amongst the front runners?
No, it definitely doesn't. I think it's more of a hedge for Apple to say, well, look at the cost of buying NVIDIA chips and their superiority at AI inference, as well as the software that connects these chips. So it's really hard to replace NVIDIA and really be competitive in AI. What it really is the hedging. We've seen Google talk about the same ideas of developing their own chips to maybe offset some of the cost of buying the extremely expensive NVIDIA chips. So it's just an incremental move for Apple.
And what about Microsoft, already a big presence in this field? Would a new AI language model perhaps make it the standout player?
Well, I think with chat, and owning a big chunk of that, it's more an open model. And I think that Microsoft really wants to build a model that really works around its enterprise software and such. So this investment is also a hedge for them to make sure that the large language models really suit Microsoft's needs and not sort of just this general overview, which ChatGPT is really focused on. So again, I think these companies are all looking at this opportunity and trying to put walls around certain areas so that they can still be competitive. And it's basically a race to see who can build the best systems.
So even as hedges, these are obviously quite big commitments from these big tech giants. Is that what investors should be looking for? Does it all come down to just how much hard cash a company is putting into AI that makes the difference?
Well, it does make a difference because of the extremely large barrier to entry to have any sort of model that is usable and competitive. So you're talking tens of billions of dollars investment. But from the other perspective, Microsoft, Google, Apple have made so much money over the years and over the quarters, and the only thing they can think of doing is buying back stock and paying dividends. And so the fact that they actually have something exciting to invest in that could create a whole new cycle of productivity and growth is great use of their capital. So we see this as actually a very big positive, and that's why they're top holdings in my fund GK. Microsoft, Apple, NVIDIA, Google, these are top holdings because we think this is a whole new level for what search now can move into a whole new realm of productivity, really.
So, Ross, I take it from what you've just said that you believe that the huge surges we've seen in the share prices of NVIDIA, Microsoft, Meta, and so on, that those surges are deserved. Or do you think the public and the market, for that matter, need to see a few more killer apps for AI to merit such high valuations?
Well, I think the valuations are actually somewhat reasonable if you look at forward earnings and what the potential is. There are a little bit higher multiples for these companies than they've achieved in the past, but by no means is it as crazy as some of the stock prices we saw during .com, for example, and other areas. So we actually look at these prices as, they're not cheap, but certainly with the opportunity, these are core investments, and that's why we own them. And investors would be, really amiss to not own these names and to risk missing out on one of the greatest tech opportunities we've seen and will be this decade.
Is Tesla still a great tech opportunity? The news flow has been very negative, squabbles over Elon Musk's salary, recalls, slowing sales in China, job cuts. Is this a pioneering first mover that is now falling by the wayside?
That's not the way I see it. I really see Tesla as this incredible EV company that's been horribly neglected by the CEO. And because of his behavior, he's turned off his core customer base who aren't buying vehicles. And in response, he's laid off half the company and now pivoting into AI, robotics, and really cyber cabs, which we don't view as lucrative a business as just selling vehicles to the consumer, which we think can be a very lucrative business for Tesla and has been in the past. So I think the real question is how you see the world in 5 or 10 years. And if you see the world with lots of, cabs that look the same and we're all just taking these driverless cabs everywhere, well, then Tesla's a great investment. But if you see the world a little bit more like I do, where it's going to take a long time for humans to give up the pleasure of driving and the desire to control their, sort of activities, I think there's a place for robo-taxi, but there's lots of competitors and the economics don't look good to me. And so I think Tesla's a fundamentally different investment than when we invested in it. And that's why we've lowered our position substantially. But at the same respect, we don't want to be out of Tesla because maybe this works, and I don't like betting against people. And Elon is one of the innovators of our time, despite all his personal flaws. And so we still have an investment in Tesla.
And where does Rivian fit into that picture that you just drew for me? It's reporting its latest earnings today, but Do we have a challenger for Tesla's crown there?
Yes and no. I mean, Rivian is a very specific company that's really focused on the high end currently, and it's going to take them some time before they really sell vehicles to the masses like Tesla's really focused on. But what I think Rivian has that Tesla doesn't have is the ability to make margin when they scale because it's a premium brand. And I just bought a Rivian for my wife because, now I'm looking at other cars because of Elon's behavior, and the Rivian is a wonderful vehicle. It's just beautiful. So, drives great. It's so I think what Rivian needs is somebody like Amazon or Apple really to invest more in the company, go all in. But I think down the line, Rivian's going to be a very successful brand if they can get their business operations tighter and get the financials to work. So they still got a lot of work to do, but boy, Rivian has a lot of potential.
Ross Gerber of Gerber Kawasaki, it's been great to hear your thoughts today. Many thanks. That is Market Insight. Don't forget there are more videos on Reuters.com.